All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, today was the FOMC rate hike meeting day today with the summary of economic projections. A very important day for the future of the macroeconomics. And Bitcoin had some volatility today, some short term volatility during that meeting and after that meeting. But one thing that we did see is another, what looks like, let me zoom in onto the hourly chart, another touch of our Fibonacci channel and another rejection pretty much to the dollar of this Fibonacci channel. And now we are dumping down. And in the Telegram earlier today, I talked about how on today's low that we made this morning, we front ran hitting our golden pocket, our local golden pocket. So if we pull our golden pocket from the last, what was that, Monday's lows, on Monday's lows that we barely front ran our golden pocket as well, where we hit the 618 just barely, just hit the start of our box to the highs that we made yesterday, you can see that our golden pocket is going to be coming in on an important back test. And this back test here at about 91.5 to 91.3 is our anchored VWAP from 49K. And after we did front run it this morning, I did post in the Telegram, guys, be aware we might get a pump and dump during the FOMC meeting where we come back down and actually hit into that anchored VWAP and take that liquidity from yesterday. Watch for a fake pump here. And sure enough, just as expected, we got the 25 basis point rate cut. And Jerome Powell did come out a little bit hawkish. Now, I will say the summary of economic projections, they're forecasting better GDP for the year of 2027 than was expected in September. And a couple things were a little bit bullish in that summary of economic projections, but overall, they're worried about the jobs numbers coming down. And remember, the Fed has a dual mandate of keeping inflation down to around 2% and keeping the jobs employment numbers high or unemployment numbers low. And we are seeing some softening in the labor market, which means lower employment or higher unemployment, which is bad, which could cause the Fed to start printing money. But it is not bad enough yet where they're even thinking about printing money. And actually, they talked about what is most likely to happen in January is a pause on the rate decisions. So no cut in January, but rather a pause in January. And that is a little bit bearish for the market that was expecting another rate cut in January. So, of course, we get the pump on the headline news of a 25 basis point rate cut. A lot of retail sees that. They buy the headline news. Oh, a rate cut is bullish. They buy it. We pump up. We hit it up into some key resistance. And now we're dumping here, trapping a lot of late longers. If we look at, let me just refresh this here. If we look at our CVD and open interest here, you can see that right during that FOMC meeting, right during the pump here of the FOMC meeting, it was all of this shenanigans. This red kind of Darth Maul candle was the actual rate cut announcement of 25 basis points. And then afterwards was Jerome Powell speaking for, an hour and a half, it seemed like. And you can see a lot of longs were stepping in, especially right at the end. Look at this. At the exact highs, guys. I mean, retail gets trapped in this trap over and over and over. They get fooled by this trap over and over. But fresh longs coming in, and look at how high the CVD was increasing. Vertical, it was almost the entire market was longing, and you can see those were fresh longs because our open interest is increasing right up into our resistance. And now those longs are trapped underwater, and look at the big dump in open interest that's occurring afterwards because those longs are trapped and they're getting forced to close out or stopped out of their positions, stopped out or liquidated out of their positions. And since then, we have flipped the VWAP bearishly, and we are now rejecting from the VWAP on low time frames, showing that we might see a little bit more of a downtrend, at least to come down to that kind of key level of our golden pocket and our anchored VWAP. Which is between 91.5 and 91.3. And it would also grab the liquidity from yesterday's low. So I did take another short because my short, I still was in a short. I didn't take another short. I added to my short position. I was in a short from around 94.2 and my stop was above the high. We obviously didn't take out the high. But when we started to reject from this Fibonacci channel resistance again, I added to the 50% that I'd already taken out. I had taken out 50% of that long trade already, and a short trade, and I added back to it, and I have compounded it, which has lowered my overall entry a little bit to about 94.1K, but I am still in that short, and I will look to take some profit around this golden pocket if we start to bounce from this golden pocket. But remember, my larger bias that I've been talking about for the past couple of weeks, guys, and this is based off more of the high time frame analysis here, is that I am still thinking we could be in a complex fourth wave correction in the bigger impulse down. So this being a wave one and a wave two, an internal wave one, internal wave two, this was our third wave. And all of this here could be a fourth wave before we completely crash down and come down to 78.7 or 78.3 to 77.3K before we see another 4 and then another 5 coming down to take out your 74K lows. And for me, that is still the highest probability, just like I mentioned in yesterday's live stream, until we can close a daily candle back above this Fibonacci channel resistance. That, to me, is still the highest probability. And one of the things that I would like to point out here on the charts, if we zoom into the 4-hour chart, on the 4-hour chart now, this is looking a little bit bearish for Bitcoin because we do have 1, 2, 3 higher highs in the price action, and we do have lower highs in the momentum waves, confirming bearish divergences, and our money flow's been draining out as these bear divs have been forming. Now we're crossing back into the red again. So for me, this is a sign that this entire corrective structure might break down soon, and we might not just bounce from this local golden pocket, but we might get a bigger push to the downside. So I am still looking for a bigger breakdown, especially off this trapped liquidity that was up at the top, all the trapped retail that FOMO'd in at the very top of the market here today, into key resistance, right into that Fibonacci channel. I did post the second we started rejecting from that Fibonacci channel, not the second, about 10 minutes later, I posted about we were rejecting from this channel again, and we might see a bit of a dump here. Now, locally though, because we did come up so close to taking out yesterday's highs, we might bounce one more time first really quickly from this golden pocket and this anchored VWAP to come up one more time to take out that liquidity and make one more high, and therefore creating maybe another drive of bear div here. So we'd have regional and local bearish divergences on the 4-hour, and then we might see the bigger dump. And of course, we'll see bounces along the way. I'm still expecting a bounce around this 87K area. We have some very key liquidity sitting down below there. We have a naked daily point of control sitting down there below there. And I believe it was also a golden pocket down there. If we pull our golden pocket from the 80.5K lows to our highs, not a golden pocket. It was, yeah, I guess it is a golden pocket, but it is the golden pocket pulled from this area. And let me turn on that naked daily point of control. Let's see. We have to readjust this golden pocket now. Yeah, so this box can come a little bit higher. It's not looking as nice as a zone of confluence now. I have to say, with our golden pocket raising up a little bit, we would still have that liquidity grab into the golden pocket, and 87.5, 87.6 down to about 87K would be still the area I'm looking for some sort of bounce, but it's not as nice now. And the fact that we could see some big bounces, big dumps with small bounces here doesn't mean that our overall impulse to the downside to make new lows below 80.5K will not play out. To me, this is still the highest probability. Okay, but in the meantime, we'll trade just this little price action, this kind of mini range that we got going up here. I've been looking at a couple volume profiles. So we look at the volume profile of this sideways price action after our ascending channel ended. You know, we kind of had this ascending channel in here. And this kind of sideways price action, you can see our point of control of our range is going to come in right where that golden pocket is. And we did reject from the value area high of the range. So because we rejected from value area high, we have a high probability to come back down and back test our point of control bullishly. And then if we lose the point of control, you can see our value area low of this range is going to be very close to our box that is below us. And this support level here around 89.5 to 89.3, where we do have some key liquidity resting down there as well from Monday's lows. And that golden pocket, if we pull that local golden pocket from Sunday weekend lows to the highs that we saw on Monday, you can see that golden pocket right there. And you can see that Bitcoin front ran that golden pocket as well. So this to me is an area where we could see another little bounce. So yeah, we might start a bigger downtrend, but we might see a bounce here to take the highs one more time, then come down, bounce here, lower high, maybe bounce here, lower high, and then see this bigger kind of dump to the downside, making some 1-2s in here and some 4-5s in here, seeing that impulse complete to the downside. But locally, I do think it's bearish that we tried again a fourth time, guys. And yesterday on the live stream, I emphasized 3 taps is often the time. If you reject on the third tap, you will get that dump. But we can look at this kind of. Let me hide this range real quick. This second tap here, I'm considering this kind of one tap. This was kind of our first tap of the Fibonacci channel, our first bearish backtest. This was our second bearish backtest, and this is our third bearish backtest. And you can see on the second one, there was a few wicks within here that were kind of close together, like an upper range in here that was considered a tap. On higher time frames, it looks like one tap. So the same thing is kind of playing out right now within this little mini range. We could see a little bit of consolidation, a little bit of a range form before actually losing this thing, or even one more push up higher to create that kind of 3 tap locally. And then we would have the 3-year tap regionally and a dump. So we'll see how this plays out. It is just, to me, we have confirmed bearish divergences on the 4-hour chart, confirmed money flow draining out of the asset as we keep pushing up in this kind of corrective formation that we see. To me, all of this from 80.5K looks far more corrective than impulsive. If we look at our volume here, if we turn on our volume and we look at the volume, I mean, yes, for the most part, volume is lower for most of this. And this is the Coinbase chart. But if we look on Bybit's chart and we look at the Bybit USD pair, you can see that volume is getting lower and lower and lower as it's pretty low this entire corrective move up. And if this was impulsive price action to the upside here and we're about to bust up to, 97K or to 103K, we would want to see some nice volume in there. And we're not really seeing it right now, guys. So to me, I am still leaning a little bit more bearish here. Once again, leaning more bearish until we can close a daily candle above our Fibonacci channel. My bias has to remain bearish on the higher time frames. Does that mean locally we won't get another push up, another bounce from this anchored VWAP golden pocket and another push up? No, we could. Absolutely, we could. But overall, I am still thinking we could reject from this macro resistance here and start to impulse down. And then we looked at the order flow, guys. Just the order flow today, man, what a perfect trap for retail. The hype of the headline of a 25 basis point rate cut, you can see almost all longs coming in after that. While Jerome Powell was speaking, almost all long positions. We did push the price up. Those were fresh long positions that were pushing the price up, but now they are trapped, and most of those are underwater, and that could be used as fuel to continue pushing us down further. And then if we go back to our trading view charts and we zoom out to the daily chart here, I mean, guys, this just, to me, looks corrective. You can see on Market Cipher B, money flow starting to roll over here and could confirm another rollover. And here's the cool thing, guys. If we did come down to 77K or even 74K, we could now form some nice bull divs. And remember, on this 80.5K low, first of all, there was not really any major support there at 80,500, any major support levels as far as volume levels, liquidity, or anything like that. But also, generally, if it's a major low down here, if this was going to be a major low when we were about to push, impulse back up to potentially new all-time highs, you generally see bull divs on the chart here. And we just didn't see it. Unlike our 74K lows, where we were coming into some very key support, and we saw bullish divergences on the chart forming on the daily time frame. And also, remember, that was a key support. If we go to our Bybit USDT chart, it was a very key pitchfork band of support of our bullish wave 3 bullish pitchfork. And so we saw that the bull divs confirmed on the chart, lower lows in the price action here, higher lows in the momentum waves, and your money flow is starting to rise to the upside on the daily. We are just not seeing that at this 80.5K low. If we come over here on the chart and we look at this, there is no bull divs here. And to make another low here, to continue this overall impulse down, to make another low, and then even 2 more lows, creating that kind of 1, 2, 3 lower lows in here, 3 lower lows in here, and creating some bull divs would be very nice to see for a more macro bottom. And if we remember the live stream from yesterday, I talked about the scenario of our bigger ABC correction, our C wave down being an impulse that is incomplete and could bring us all the way down to 70K, or just to take out your 74.5K lows. So that is still the higher probability for me. After our 5-wave weekly impulse ended, we're looking for a big corrective move, a flat correction in here. And so looking to come down to take out that A-wave lows at 74.5. So my bias is still remaining overall bearish, more macro time frame. But that is honestly about it for Bitcoin, guys. We can look at the liquidity. Let's go zoom into the last week of liquidity here. Yeah, I mean, we do still have some liquidity above the highs from, what was that, Tuesday? Let me get back onto the hourly chart. Let's get back onto Coinbase. Yeah, from Tuesday's highs, we still do have liquidity resting above Tuesday's highs. And that's why, with that liquidity being so close and being a magnet, you could also see we do have liquidity resting down into that 89.5 to 89.3K level, really 89K. So there's liquidity above these highs, and there's liquidity resting below these lows. Now, if we go back to our liquidation heat map, you can see actually there is more liquidity resting below 89K rather than above our highs from yesterday. And what market makers like to do, especially when they're preying on retail like they have been lately, is they like to stop out both sides. So we might see even this drop first to bounce from our golden pocket that was front run yesterday or earlier today, taking out that liquidity, then a push up to take out the liquidity from Tuesday's highs, another rejection from our Fibonacci channel, and then we might get the bigger dump starting here. And that is something, actually, excuse me, this is not, the liquidity is resting down below these lows at 89K. So, yeah, in that scenario, we might see a bounce from here to take the liquidity above us first, and then come down, take that liquidity, lower high, and then see maybe that impulse. This could be a wave 1, wave 2, wave 3. We don't know how it's going to play out. We'll just keep an eye on this as this range is forming. But I do think keeping an eye on not only this upper price action here, you could see this as a range, and like I was showing earlier with the fixed range volume profile, you could even see all of this as a range in here. So if we pull those volume profiles, let's just pull the volume profile of our most local range in here. Yeah, and we are below the POC. You can see we're rejecting from the POC of that range, wicking up to the value area high and up to our Fibonacci channel. Yeah, I mean, to me, it's probable that we do come down to 91.5 to 91.3. Money flow is draining out of the asset on the hourly chart. We did print. No, I guess that's not bear divs on NAMI. It's a little bit choppy here, guys. It's choppy, but remember, we're at a macro resistance, and the fact of the matter is we keep rejecting from the macro resistance. And until we can get back above and flip that to support, the overall bias, in my opinion, has to remain bearish. Okay, let's look at our Model 2 heat map, and we will go to the last 3 days of trading here, just this week's of price action. Yeah, and you can see the majority of the liquidity is resting into those 89K lows. That's definitely where the higher amount of liquidity is. All right. Other than that, there's not too much else to talk about on Bitcoin. No, we did confirm a new naked daily point of control just about 15 minutes ago with the close. We have a naked daily point of control at 92, about 92.6, let's say 92.581 to be exact. And we could, continue to kind of grind in this little structure here, come up to there, reject from that before coming down to this golden pocket. But overall, I do think it's a high probability we do come down to this golden pocket at 91.5 to 91.3. If we do start coming down there, now you would have to look on very low time frames like the 6-minute, 12-minute, and under, maybe the 15-minute. But if we're making some bull divs, lower lows, lower highs, lower lows, lower highs, coming down to that area, and we do see some bull divs on the chart coming into this area, I would attempt a potential scalp long opportunity from this guy because we also have liquidity here. So it would be a nice trade, an SFP into a golden pocket. And anytime I talk about on this channel, liquidity grabs into golden pockets are very key trade setups that I like to trade. So whether we have bull divs or not, if we do come down here, we grab the liquidity from yesterday's lows into our golden pocket and get back above this low at 91.556. I might attempt a long position there, a hedge long position, because I'm still in the short. Stop loss would go below the low, and I would be targeting taking out the liquidity of Tuesday's highs. Nice little risk reward scalp position there. And then, of course, I'm still looking to flip short overall or to remain in my short overall, potentially all the way down to take out your 80.5K lows. But that's about it for Bitcoin. Now let's move on to the total market cap. Before I do move on to the total market cap, guys, I do just want to announce the partners of the channel. So BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the descriptions, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts if you deposit some of the larger amounts into the exchange. They're also offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, you can get a 50% deposit bonus. And then various 20% and 10% deposit bonuses, depending on how much you deposit into the exchange. I have also partnered with BYDFI to create a Telegram community where I do post my market analysis, trade setups every once in a while in there, and let you guys know what I'm thinking. You can also tag me in the general chat, ask me questions about coins if you're interested in an altcoin or if you're interested in a certain level or, a theory on what Bitcoin could do. If you're interested in joining that Telegram, it is free. All you need to do to enter this private group is to join BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with. You will get the 20% discounts on trading fees. And if you KYC, you can get the 50% deposit bonus. So in my opinion, it's a win-win for everyone. Once you've done that, click the Telegram link in the description of this video. And once you're in that Telegram channel, you type in /verify in your user ID, which will be right up here. It's going to be a string of letters and numbers right up here. And that'll get you access to the Telegram community. And once you are in, you are in. Okay, second partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator here. It shows you bear divs, hidden bear divs, bull divs on the chart. A very, very useful tool. If you're going to be an expert in any trade, you want to invest in the proper tools for that trade. To me, NAMI is part of the proper tools for that trade. It helps me with my trade confirmations, my trade entry and exit confirmations, but it also helps me get an overall bias on what the asset is going to do based off of bull divs, bear divs, money flow, things like that. So if you're interested in purchasing NAMI, they do have a 50% off discount code. If you use my affiliate link in the description and you use the discount code DIVINE50, you can get 50% off the lifetime subscription to NAMI. In my opinion, it's an invaluable tool. And so if you're interested, links are in the description below. And then lastly, we have MEXC and Bybit, both great exchanges, both offering discounts on trading fees and offering some futures bonuses. Bybit's offering up to $30,000 in futures trading bonuses, depending on how much volume you move. And MEXC is offering a 10% initial deposit bonus. So links are in the description. It's just a good way to help out the channel. Also, guys, if you get any sort of insight into the market from this video, please hit the like button for me. Please share the video with anyone you might think finds it interesting and subscribe to the channel. All right, getting on to this total market cap. So, guys, another reason why I do think we might be able to make one more high here. I talked about last week and earlier this week in the live streams, we did bounce from the bottom of our key pitchfork. And I did say we might be able to kind of push up to backtest our lower band of the pitchfork before kind of creating a more sideways range in here that lasts a little bit longer. And we haven't quite come up to the top of the pitchfork or to the lower pitchfork band yet. So it is possible that we do, after bouncing in another higher low overall, make one more high to come up to actually hit into that pitchfork band. And that would be if we're hitting into the pitchfork band of resistance on the total market cap, as Bitcoin or some of the altcoins are hitting into their resistances, that would be added confirmation for me that we could get a bigger dump to the downside. But if we zoom out here onto the daily time frame, I mean, we did get the nice, this pitchfork has been so well respected. At the beginning of the year, we rejected from the top of the pitchfork. The upper band was holding overall for months during this distribution range. Then we distributed down to the midline. We flipped the midline bearishly. We worked our way to the lower band. And then after working your way to the lower band, we pushed back up to the upper band, flipped the midline, obviously, to support in this range. And from there, and especially our all-time high here, you can see a perfect rejection from that upper band. And since then, we've dropped all the way to the bottom of the pitchfork. Now, if we want to maintain our overall bullish market structure for total market cap, we really don't want to lose this pitchfork here, the bottom of this pitchfork. And so for me, I was expecting a bounce from the bottom, and we did even get that higher low back test from the bottom. And if we do come up now and hit the lower band of this pitchfork, I would be looking at it as what used to be support now being flipped to resistance. Just this general band, what used to be support now being flipped to resistance. And that would be a potential area where we could dump down, even creating a third tap. You guys, I've been talking lately about these 3 taps on these major pitchfork and major channel levels. You'll often get like a tap 1, tap 2, tap 3, not necessarily distribution, because remember, with distribution, your second tap always has to be lower in this case than your first tap, even if it's a Model 1 distribution. But we generally see these 3 taps, and then you could get maybe a bigger reversal to the upside. I'm just looking at a potential larger range forming between the bottom of this pitchfork and the lower pitchfork band. So we'll keep an eye on that pitchfork band up here. If we do get one more push up to hit into the high of this pitchfork band, I will be looking actively at Bitcoin. If it's at resistance, I will have added confirmation to take another short position. Okay, moving on to Ethereum. Ethereum, guys, one thing about Ethereum is it is pushing up pretty nicely. And now from our lows that we bounced, first of all, on these lows, it was a major pitchfork midline. We also got the back test of that pitchfork midline. And we have been trading within this ascending channel. You can see I took the ascending channel from the low to the higher low to our first major high, or actually this high, our second major high here. And have this ascending channel structure. You can see the midline's been very nicely respected in here. And yesterday we broke above not only our anchored VWAP and our golden pocket at $3,300. If we pull that golden pocket from our last big daily high to our lows, you can see that golden pocket was coming in 3,300, pretty much right where your anchored VWAP was. And it was also the top of the channel. We broke above it and closed the daily candle above it yesterday. And when we did that, I said, guys, it's likely we make new highs, potentially even coming up to this 3,600 to 3,682 level. But I will say this, with our push up today, we did break the highs, and I did actually take some more profit. I'm 95% out of that long position from this area here. Ethereum, this does look like it can be some sort of contracting diagonal or leading diagonal here. A wave 1, a wave 2, a wave 3, a wave 4, a wave 5. Now, if your 5 waves are complete here, we could see a drop at least to the golden pocket, pulled from the lows of this motive wave to the highs that we made today. And let me fix that, make the lows right on there. And this golden pocket coming in around 29.20 to 29.50. You can see we also have some very key liquidity resting right into that level. So we might see a drop. If we fall back inside of this channel and lose our anchored VWAP again at 3,300, then we could be seeing a bigger dump, a 3-wave corrective move to kind of come down to the bottom of the pitchfork and to our golden pocket, grabbing some key liquidity down here as well, and make more of a overall sideways range in this general area, which I've been talking about, these ranges being probable on higher time frames. So for me, 3,300 is now flipped to key support. If what it used to be resistance, now it's flipping to support. If we lose 3,300, we are probably going to see a bigger dump. And also, if we zoom in onto the 1 hour chart, you can see, first of all, before we zoom in, we have this bigger wave 1, wave 2, wave 3, wave 4, wave 5, kind of like this leading diagonal here. And within our last impulse up here, our last push up, if we zoom in onto the hourly chart, can we count 5 waves within this impulse up? So if we look here from this low, it looks like we can. A wave 1, wave 2, wave 3, wave 4, a wave 5, a 5-wave impulse. So after that 5-wave impulse ends and our bigger 5-wave impulse potentially ending, we could see now a big drop here. So holding this level, which we did hold last night and earlier today, we held it as support. We made new highs. If we lose that level, I do think a bigger drop on Ethereum is coming. If we can hold it and bounce from it again, I think we are going to continue breaking up to $3,600, to around 3,600 to 3,680, where we have some key liquidity resting at 3,658. We have a golden pocket up there, and we have, let me zoom back out here to the 6-hour chart here, and we have our 4-year long range value area high on Coinbase. That 4-year long range value area high is coming in right around $3,600, where you can see it's also going to be a golden pocket just above that. It's going to be the back test of our pitchfork band. Once again, as far as pitchfork trading goes, guys, the band was holding as support. We lost it. We back tested it bearishly. We rejected. We came down to our next major pitchfork support, being the midline. Because we bounced from the midline and we're seeing some motive structure here, we could work our way up to back test on a higher time frame now, a higher time frame back test of your pitchfork band. If we reject there, I would expect another push down to your midline, or at least a push down to your local golden pocket. So Ethereum, it's looking more bullish than Bitcoin, and we did look at the Ethereum versus Bitcoin chart, and it does look like Ethereum wants to break out against Bitcoin. It already has, in some ways, broken out against Bitcoin, made new highs today, as where Bitcoin did not make new highs today overall. And it still looks pretty good. Like we could get up to this 3,600 to 3,680 level of resistance. But if we fall back under 3,300, I will be expecting a bigger drop. If we zoom in onto the 4-hour, we do still have the same 4-hour bear divs regionally. Actually, they're not really bear divs on Market Cipher B. Yeah, they're more like equal highs here. Now on NAMI, we do have bear divs confirmed between, what was that? Last Wednesday's high and this Wednesday's high. You can see those bear divs and money flow, potentially money flow bear divs here as well. Daily chart, on the daily chart. Yeah, money flow is looking like it might want to roll over again, just like Bitcoin. Not quite confirmed on the rollover yet. If we do close today's candle, which just opened, 27 minutes ago, if we close it red, then I do think this money flow will start to roll over here. And you can see NAMI's money flow is already topped out and could be about to roll over as well. So we'll keep an eye on that. Summary of Ethereum. If we lose 3,300, I think we're going to see a bigger drop. If we hold 3,300 as support, I think we're working our way up to 3,600 to 3,680. And then from there, I am planning on taking a short around 3,600 to 3,680. It would be really nice to get the liquidity grab at 3,658. Maybe a liquidity grab into that 0.65 at 3,682. And that, to me, would be a nice potential short position. Okay, moving on here. Let's move on to Solana. On Solana, now, guys, let me turn off some of these levels here on Solana. Weeklies, dailies, naked weekly points of controls. Okay, nothing really has changed since yesterday on Solana. We're still just ranging within this choppy sideways range within our pitchfork band, and also it is our range between the 2-year long range, point of control, and value area low. You can see we did come up into our resistance. We laid out this resistance yesterday. So if we go on to the 2-hour chart, laid out this resistance. Actually, let's see. Was this? No, that was earlier this week. So overall, we're still kind of rejecting from this resistance. We are coming back down to our pitchfork band. So you can see on this pitchfork band, and I did say this, we often trade within these pitchfork bands. And actually in yesterday's live stream, I talked about how we were bouncing from the bottom of the pitchfork band, pushing up here. Actually, where was that? Yeah, we're trading within the pitchfork band. So you can see we rejected from the point of control in the top of the pitchfork band. Now we're working our way down to the bottom of the pitchfork band. If this holds, we might be able to make another push up, another attempt to push up here. But we do have to be aware here. We have a sideways structure here. More than Bitcoin, it's very sideways. You can see a very clear sideways range here. And one of the things that we've seen after, remember, this was all part of the impulse to the downside. This was all part of our initial impulse to the downside. After that impulse ended and we made our lows at 121.5, now we could be seeing a sort of head and shoulders pattern here, a left shoulder here, a head here, a right shoulder here, and we could be about to at least dump to back down to the bottom of our range and continue what could be an accumulation range. Or if things get really bearish and Bitcoin dumps to 70K, we could lose this and really start dumping here. So once again, I'll just say trade the range until it breaks, like we talked about in yesterday's live stream. You want to short near the highs of the range. You want to long near the lows of the range. You can see my next green box is around 127.5 to about 126.5. But I would say that this, if you're very bullish on Solana and want to think that it's going to continue to push up here and break above our range, break out of this range, we are at a very local support level, being your pitchfork band of support. For me, it's not enough. Actually, we're starting to break it down right now. For me, it's not enough. And I think that we might continue pushing down a little bit lower here. If we look at that golden pocket pulled from the lows of last Monday, December 1st to our highs. Okay, we've already hit into this golden pocket. So that golden pocket was kind of this range that held in here. This all held as the golden pocket. And then we got that push up. But if we pull our larger golden pocket from the lows of the range to our, yeah, okay, that's already been tapped too. So can't look at those golden pockets. Actually, what we need to look at now is our most local push up. We'd go from the lows to the highs, and we would have to look at the 786 or the 886. And even the 786 has been tapped here. Got that bounce from 786. So really now, in order to look at fresh golden pockets, we're going to have to pull it from the low that we made on Sunday, this last Sunday, to our highs that we made on yesterday. Yeah, and coming down, actually, I do like this 786 level down here at 131 because you can see the liquidity from Tuesday's lows are down there. And then let's check out our naked daily points of control. Do we have any new naked daily points of control? Yes, we do have some naked daily points of control. I'm just going to mark out the one from today because the other ones are already marked out on the chart. So we'll mark this naked daily point of control out. Let me get that a little bit more accurate. All right. And then let's look at our naked daily points of control because I do see that around our potential very local golden pocket at 133, if we take this same Fibonacci from the weekend lows to the highs that we made yesterday, and we look at the golden pocket, all right, it's golden pocket's actually above that naked daily point of control. I don't like that. I don't like the lack of confluence in this area. For me, the 786 would be a better local support level because the liquidity there, and remember, I talk about the most important things on the chart are volume and liquidity, with liquidity being number one. So for me, I would have to say that 131.4, the liquidity grab into 131.4 might be a local scalp level if we're going to continue to kind of grind sideways within this larger range. Small bounce, maybe come to back test that pitchfork band as resistance now before continuing down to our real support level around 127.5 to 126.5. and also taking out the liquidity from this higher low into that, and then maybe seeing another lower high before coming down and taking out your range lows. Either way, this is the range that we want to be playing on Solana. It's a very clear sideways range between the point of control of our 2-year long range and the value area low of our 2-year long range. So if we go ahead and turn on that range, you can see this is the volume of that range. And let me turn off the larger range so that we don't get distracted here on that. We're rejecting from value area high. Right now, we're losing the point of control. And the value area low of that range is where that 786 is. So that would be my next local support level that I would even be interested in considering along. Until then, I'm not interested in anything else on Solana. 786 value area low, and our naked daily point of control is just above. So we might wick past the naked daily point of control, but close an hourly candle at or above that naked daily point of control, and then work your way up to back test that pitchfork band. All right. Other than that, though, guys, money flow does still look pretty good on Solana. It is still rising to the upside. If we zoom out to the 4-hour chart, on the 4-hour chart, money flow is still curving to the upside, unlike Bitcoin, where it's been draining as that ascending kind of ascending channel has been forming on Bitcoin, or that, gross looking structure has been forming. Money flow has been draining out. Well, on Solana, it's actually rising to the upside here. So overall, we might be able to see, and no bear divs confirmed. You can see lower high here, lower high here. So because it's not a higher high, we don't have confirmed bear divs. So to me, it's more likely that Solana continues to range. Instead of seeing a massive dump, it's continuing to range. But I am looking at that 131.4. If we lose that, I'm not interested in anything else until we come down to 127.5, or really 127.4. And that's about it for Solana, guys. Moving on to Sui. Sui is rejecting, a range is forming once again between, let me clean this up just a bit here. The range is forming between the pitchfork band, the lower pitchfork band, and the bottom of your pitchfork. It was acting as support. Then we flipped it to resistance, and now we're losing the bottom of the pitchfork band. You can see today and yesterday, we kind of, after rejecting from the top of the pitchfork band, and that was also a naked weekly point of control up there at 178, we are losing the pitchfork band, bearishly backtesting the bottom of the band now, and it looks like we're dropping. So we did front run earlier last Saturday, last weekend, or this last weekend, we front run the golden pocket at 147 to 149. Now, because we're rejecting on a lower high from the bottom of our pitchfork band, I expect this to at least come down to hit this golden pocket below us at 149 to 147. Now, if that golden pocket doesn't hold, of course, we do have some local liquidity into that golden pocket, which is nice to see anytime you see a liquidity grab into a golden pocket. But if this golden pocket here does not hold, then I do think we are going to drop much, much further, potentially all the way down to the bottom of the pitchfork again, around 136. And if we look at our 886 Fibonacci, that's where our 886 Fibonacci is going to be. And your 886 Fibonacci in sideways ranges often bounces you. So that would be the next level I'm looking if we do not bounce from our golden pocket. Now, let's say we do come down. It's more likely now in my scenario that we're going to come down to this golden pocket. Let's say we bounce from this golden pocket, a nice 3-wave corrective move down. We bounce and we start to push up. We want to break above this pitchfork band and locally flip it to support. If we can do that, I do think we can see that move up to that 220 area, which is going to be very key resistance. That is going to be our 0.5 Fibonacci of our bigger, if we're looking at the bigger impulse down. Let me zoom out to the daily chart so I can explain this. We have a bunch of 1-2s in here. You can see this kind of descending channel. 1, 2, 1, 2, 1, 2. Your big third wave here to the downside. This could be a 4, 5, 4, 5, 4, 5. We could be seeing this impulse can come down all the way to 109. But we might be in a fourth wave corrective move. All of this might be a fourth wave corrective move. Now, the common targets for your fourth wave corrective move are between the 382 and the 0.5 Fibonacci. of your wave 3 down. And this is our wave 3 down here. So the best level for me is 220 because it is pretty much going to be the value area hot low, the bearish backtest of your large range value area low in confluence with the pitchfork midline and your 0.5 Fibonacci and some internal liquidity, these daily highs in here. So if we can break, this is only in the scenario, guys, that we can break above this pitchfork band. Because if we reject from this pitchfork band, this might have been it for the fourth wave, and we're now about to be creating new lows in a fifth wave. And then another 4, another 5, another 4, another 5, coming down to potentially 109. Finishing this overall impulse down here. Where also our 1.236 Fibonacci extinction is, by the way. I've shown that in many videos. I showed that in yesterday's live stream. So if you're interested, go check that out there. I'm not going to go into depth on that right now. But there is a possibility that this was a 3-wave corrective move that's going to end in the backtest of the bearish backtest of your pitchfork band. And now we're about to impulse down here and create new lows now. So the fourth wave could be in here. I'm not saying it's guaranteed, but it could be. And it is about the same length as your 2s in here. Your 2s in here. Your 2s in here. It's about the same length as your 2s. And you want to see that kind of symmetry there between your 2s and 4s. So we'll have to see. Remember, 2 levels I'm looking locally. Very local levels. And guys, if Bitcoin starts to get volatile in a dump, these levels will get sliced through so quick. So be aware. Don't be setting limit orders here. You want to be watching for the confirmed swing failure pattern of these lows into that golden pocket and then a rise above those lows in order to enter the long position. But 147 to 149 is my first level support, golden pocket liquidity grab. And then the next level would be at that 136 where our 886 Fibonacci is in confluence with the bottom of the pitchfork band, which could give us that kind of bounce again. So those are the 2 levels I'm interested in looking for scalp longs if we're going to continue to range and not see an impulse down quite yet. All right, moving on quickly to Say got some nice bullish price action today, and you can see we almost came up to that liquidity grab, our box of resistance that we were talking about. Now, earlier this week, we did kind of reject. We had a naked daily point of control at in a daily level between 14 and 14.2. We just got a small rejection, a 3-wave move, taking out your local lows of that wave A, A, B, C, and then we pushed up again in another impulse here. But we have not quite come up to our resistance yet. That liquidity grab into your naked daily point of control. And it's also, let me zoom out here onto the 8-hour chart. It is also the value area low of your larger range, your larger sideways range in here. And let me turn off some of these levels so that this chart doesn't look as disgusting. So this level between 15.5 and 15.7 is the level I'm looking for a potential short. I do have to say on Say looks like it has a very nice, what did I just do? Say has a very nice rounded bottom, guys. And look at, a lot of people look for inverse head and shoulders or accumulations in the wrong spots. Like they'll look for an inverse head and shoulder at the top of a move, like way up here after we've pumped a bunch. But inverse head and shoulders are bottom reversal patterns. So you want to look for them at the bottom of dumps. Well, we've had a pretty aggressive dump on Say over the past couple of months. And now on the higher time frames, we're forming this very nice looking left shoulder, head, right shoulder here. And it does seem today that we are breaking out of the neckline, which was that purple box of resistance. We're breaking out of the neckline of that resistance. And, so I do think it's possible we come up to our resistance level. Now we could come back down locally, flip this purple box to support to continue working our way up here and break this bottoming reversal pattern, this nice rounded bottom here. We could break it to the upside and at least come take out your liquidity around 15.6, 15.559. So locally, because of that, because we're breaking above our neckline, oftentimes you will reject on some local resistance and you'll come and back test that area. So now we can look at that daily level. Let me turn that back on. That daily level around 14 cents. If we can flip that to support, then I do think we will continue working our way up to our liquidity grab. If we lose it, unfortunately, this could have been a fake out of an inverse head and shoulders pattern, and we could be about to really break down here quite aggressively. And for me, the support levels that I would be watching if we break down, let's zoom out to the 4-hour chart. I would just be looking at this could have been a 3-wave corrective move, and we might be able to break all the way back down to make new lows. But at the very least, we would want to pull that golden pocket from the lows to the highs that we made today. And we'd want to be looking at our golden pocket. Okay. Golden pocket's going to be around the point of control of this range. If we pull this sideways range here, your point of control is going to be in that range. And you can also see the back test of the value area high is also the back test of your inverse head and shoulders neckline. So in a bullish scenario, we come down here, we bounce from the value area high, and we work our way up here. If we fall back inside this volume profile, I expect to move at least to our golden pocket around 13.2. Could we get a small bounce from here just to back test the value area high bearishly now and then continue working your way down? Absolutely. We'll keep an eye on that as the price action develops. But say is looking nice as far as higher timeframes go. This kind of rounded bottom or bottom reversal pattern. Money flows coming to the upside overall. And we did see some bull divs in here. So I do like the way this looks on Market Cipher B with higher lows here. Bull divs confirmed on the 4-hour time frame, unlike Bitcoin with bear divs, where bull divs confirmed and we're breaking out of this range or bottom reversal pattern. What I will say here is we bounced on the lows. We bounced exactly from the bottom of our pitchfork band. So this looks nice to me. The pitchfork bands often will hold the support, and we might even be able to see a bigger move all the way up to back test the midline again. We're not quite there yet. We have some big resistances before that, but I would say is looking overall to me a lot more bullish than Bitcoin and even a little bit more bullish than like Solana and Ethereum. So looking at that local value area high, let me just pull that one more time. Looking at that local value area high in here around, what is that? 14 cents, 14.0 or 14.1 to 14 cents could be a nice area to look for a scalp long opportunity to bring up to take out your liquidity. If not, like I said, the POC at 13.25 where your golden pocket is. And then if we lose that, I really would expect to move down to our naked daily point of control and our daily and our liquidity grab of those higher lows into about 12.3 to 12.25. All right, that's it for say. Moving on to XRP. XRP is still just chopping, guys. I mean, XRP has been pretty boring here. We're still within our descending channel. You can see on yesterday, we rejected from the highs of the channel. It was also the back test of the value area low of our range that we've had since. Let me turn off our naked dailies real quick. It was also the value area low of this range, this sideways range we've seen since the October 10th crash. So because we lost the value area low and now we've had 1, 2, 3, 4 back tests of it and really haven't been able to reestablish price action and acceptance back within that range, we could see that drop. And remember in yesterday's live stream, I did say the midline here, this midline right where we had a naked daily point of control could be a level to bounce. And it also is taking out Monday's lows. Yeah, Monday's lows. So we've already done that. Unfortunately, we're not really seeing the bounce we want right now. Let's zoom in onto the hourly chart. We're coming down to that support right now. If we don't hold this naked daily, which it looks like we're attempting to bounce from the midline right now, if we don't hold this area we're at right now, then I do think we are going to see a bigger drop to take out our weekend lows. And these Sunday lows, these lows right here at, let's throw this on the chart, at 199. We could come down to 199 to 198, where we do have some liquidity resting at 198, taking both of these lows together, flipping this, taking both these lows together, and then we might get a push up. So for me, the local level I'm looking for now, we can actually delete our old green box of support. That held very nicely, and we got a nice push up from that. It held again a second time. We got a nice push up. So I'm going to delete this green box now. and we're going to put a new box of support on the chart. That is going to be our dual liquidity grab in here. And really, you want to, I would put it like that, a little bit lower here, taking out both those semi-equal lows. And let's look at our 786 Fibonacci pulled from the lows of our crash to the highs. Man, yeah, that 786 is pretty far down there. We have a naked daily point of control ahead of that. Let's look at some of our weekly levels. Do we have a weekly level there? No weekly levels. Do we have any monthly levels? Nope. Okay, yeah, 194 is also looking good, guys, because our naked daily point of control is in perfect confluence with the daily at actually it's like 195. 195 to 194.75. And then let's look at our naked weeklies. Yeah, it's also a naked weekly point of control there as well. So the level we're losing right now, yesterday in the live stream, let me simplify this for you guys. Let me hide this liquidity levels real quick. Actually, we'll just delete them. We were looking at two levels in yesterday's live stream. We were looking at 203 because it was a naked daily point of control, a daily level, and a naked weekly point of control. You can see at 203. We're losing that right now. We're not seeing the reaction we want to see right now. That was our first level we were looking at yesterday. So then we move on to our next level. I'm not taking a trade because we're obviously not bouncing here. The next level would be the dual liquidity grab of these semi-equal lows into about 198. And then if we don't see a confirmed swing failure pattern, 195 is the next level. We might just continue to drop down to 195 here. Where we have our naked weekly point of control, our naked daily point of control, and a daily level here. So that is honestly the levels I would be watching for XRP. Yeah. All right. And then if we move to the upside, I mean, right now we're dumping. So you could pull a fib from the lows that we made just now. If we do start to recover 203, we could actually look to take a long and putting our stop below the lows. So like if right now in the next hour we recover 203, we could look for a long position from the recovery here. Stop would go below the local lows, and I would be targeting our golden pocket. Golden pocket has the liquidity of today's highs resting right above it, and it's also near the top of our channel. By the time we work our way up there, it's going to be very in confluence with the top of our channel. So if we do this, kind of grind around in here, it's going to be right at the top of our channel, 211 to 212. That is only in the event, this long position I would only take in the event that we can reclaim 203. If we keep dropping right now, the levels I just told you guys are what I'm interested in. Okay, that's it for XRP. Now let's lastly go on to Chainlink. Oh man, Chainlink is rejecting a third kind of rejection from our golden pocket. You can see golden pocket. We took the liquidity on the second one of that first high, and then we came up for a lower high here. Honestly, this looks like it could be a mini distribution pattern. You have your sign of weakness here, breaking the lows. Then you push up, take out the highs. Now a lower high. This could be a tap 1, tap 2, tap 3. We could be about to distribute down here. So what I would say here on Chainlink is, once again, we're rejecting and closing another daily candle. I'm just going to delete this real quick, and we're going to zoom out to the daily chart. We are still not really able to get back above our point of control. This is a 2-year long range. This range goes back to November of 2023, so over 2 years now. We had our naked weekly point of control there. We're rejecting from the naked weekly point of control and the golden pocket that was a wick just above our point of control and our pitchfork band, or our pitchfork bottom. But we have lost the pitchfork. We have seen a 3-wave corrective move, and this could be a flat correction in here before starting an impulse down. So just be aware. And we did front run. Remember, we front ran the value area low of that range. If I turn on that macro range, actually it's on already. Let's Just pull that. You can see the value area low was not tapped on this low. It was not tapped. If you pull that range back before, it was not tapped. So just below us at about 11.5 exactly, we could come take out those lows into your value area low. And then, of course, if we lose 1150, really, guys, there's not much to keep us coming down to 10. Not much at all. We do have some internal liquidity at 1095. But other than that, on the higher time frames, losing this pitchfork, back testing it and rejecting, and back testing the point of control and rejecting, I would at least expect to come down to make a new low. And if we lose that, then come down to our macro support. Now, $10, guys, for me, is a major level of support. I mean a macro level. And I've talked about this in past videos. I'm not going to go into depth, just to say that I will be looking to pick up spot here and look for swing longs. That's about it, though, guys. Locally on Chainlink, you could play this sideways range, this sort of distribution range that I just talked about, this upper range in here. I'm not too interested in trading this range, but if you wanted to, you could pull a volume profile. You could look at this range here. And yeah, value area low, we're coming up to the value area low. We've already broken the point of control. And if we pull a Fibonacci from the lows on the weekend, those are weekend lows, by the way, guys, oftentimes get taken out. You can see our golden pocket was right above that value. We're hitting into the golden pocket right now. So yeah, golden pocket, maybe wick past it to hit the value area low at 13.75. And we could continue this sideways range if we do bounce from this general area. But for me, I'm looking, first of all, those weekend lows are begging to be taken out. And I'm looking for this as a possible distribution where we can distribute down and come down to take out our 11.5K lows. 1150 lows. 1159, sorry. No weekly levels, no monthly levels. We do have a daily at $12 and a daily naked monthly point of control at 12.6. Okay, let's see here. Yeah, actually, we do have some nice support before then. So we have a naked weekly and a naked daily right where your value area low is. And actually, let's look at our 786 here. Now, I think we're hitting into that level right now. Golden pocket. If we wick a little bit past the golden pocket to hit our naked volume levels, this is our local support to me. This general area and even including the golden pocket. So we're starting to hit into our support now. But I would really like to come down to hit that naked weekly point of control at 13.7. All right, that's it, guys. Thank you for watching the video. Please like the video. Please subscribe to the channel. I will be live tomorrow, 2 p.m. Eastern Standard Time. Come join me. We should get some good volatility. We can look for these trade setups, and hopefully we are seeing volatility. But either way, whether it's a dump to the downside or a pump, as traders, we can play both sides. So have a good one, guys. I'll see you tomorrow.